Hello, Namaskar viewers. I am Sanjeev Pandya. Hopefully, your new year has begun very well. It's a new year. That means new you, new everything, new energy, new hope, new excitement, and something to look forward to. The reason I'm saying is that we're all set to bring you season 3 of the Tax Talk Show, the show which you have been appreciated very much since the last 2 seasons. And we are delighted to bring you season 3 of the Tax Talk Show. That means every Friday, right here on ITV Gold, your favorite TV channel, you'll be able to watch the Tax Talk Show. In that show, you're going to have all the latest that you need to know about the taxes, what changed in 2023, and what are the things that you should be careful. Now, this is going to be for personal and corporate taxes as well. So if you are a business owner from small to mid size, to large size business owner, you should be also paying attention to, because you will be learning a lot, you will be knowing a lot from this one of a kind, the Tax Talk Show on ITV. The show is brought to you by SAI CPA Services, a very professional, complete accounting firm located in the state of New Jersey. Multiple locations in New Jersey, but no matter where you are in the United States of America, you can contact them, set up an appointment over the phone, via Zoom, or of course, in person also. Their phone number is 908-380-6876. You'll see it on the screen, 908-380-6876, and their website is saicpaservices.com. So here we are in month of January. Happy 2024. All set to bring you the Tax Talk with Ajay right here on ITV Gold. With that note, I'd like to welcome Mr. Ajay Kumar, CPA and MBA with SAI CPA Services for over 25 years, and having word of knowledge when it comes to accounting and accounting related services. That's Mr. Ajay Kumar. So once again, he joins us. I'd like to welcome him to the show. Sir, welcome to the show. Happy New Year.
Thanks a lot, Sanjeevji. Thank you very much. And Happy New Year to you too.
Yes.
Happy New Year to all our viewers. We look forward to a brand new show. Tax Talk will bring what you need to know today to make a difference to your tax liability.
That would be very nice. Let's hope, Ajay, that this year's all the tax, changes in the tax structure and tax laws and whatnot. Let's hope that it brings some kind of, I would say, smile or relief to
Absolutely.
the taxpayers.
I agree.
And at the end of the day, everybody wants refund, more refund.
I can only guarantee that if you keep watching the show, it will be worth your time. You will know enough to make sure you can save some money while you're filing your taxes.
Very good. As we begin this first episode of the Tax Talk, I want to let you know that in this season, we're adding 2 features. One feature is going to be Did You Know? Ajay will give you some kind of interesting information for you to know, of course, from taxes point of view or from the business point of view. And at the end of the show, we're going to have a financial quote by very famous personalities, and they're very, very interesting to know. So these are the 2 new added features. Other than that, a wealth of information when it comes to taxes that you will get in this show. Ajay, you and I go out for dinner. All right, you have a company.
Absolutely.
And we just go out for a casual dinner. If it's a casual dinner, can it be deducted as a business expense from your side?
Absolutely. That's a great question. Yes and no. And we'll get into it. So what we're talking about is meals and entertainment expense, what's deductible, what changed, what used to be deductible, what's not deductible anymore, and what can you do to make a difference in your taxes. So great question. So if I, as a business owner, go out with a client, TV show host, for my business, then the meal is deductible at 50%, Sanjeevji.
That's it.
It used to be 100% up until 2022. But for 2023, when you file your taxes, make sure you differentiate what meals are deductible at 50% and what meals are deductible at 100%. The difference, what we're talking about, if I take out Sanjeevji, then I ate it as well. So my portion of the expense is not deductible.
Oh, really?
Only the client portion is deductible. That's why they say, we don't know what you ordered. We don't know what the client ordered. We'll keep it simple. Only 50% is deductible.
Oh,
That's the theory behind why this.
So that means, let's say you take me out for dinner, and then obviously my portion is going to be deductible. According to the tax experts and IRS, you were going to have your meal anyway, whether
Exactly.
you went out with me or anybody else or
That's
at
the
home, you
theory.
were going to have a meal anyway. So
Absolutely.
that portion is not deductible, but the guest that you had or a client that you had, that is 50% deductible.
That's the theory behind it. The differentiating factor is for 2022, for 2021, after the COVID, IRS made special rules that even if you're going out with one person, one client, you can deduct the meal expenses at 100%. That was done only temporarily to promote the restaurant industry. So people are spending more money going out
Correct.
on meals and entertainment expenses. But now they are taking a step back. COVID is over, and we are going back to the rule what used to be prior to COVID, meaning meal expenses are 50% deductible if you are also eating with one of the employee or a potential client.
All right. So that's in a meal category. Is there any exception to it?
Well, absolutely. So let's take an example here. If you have a meal expense for the whole office or Christmas party, New Year party, now you have 100 clients coming over there. The meal expense is probably $1,000. You say, well, if you are giving me 50%, it's not fair to me. I did not eat $500 worth of food. I was one of the 99 people.
Okay.
So they made an exception over there. If more than 50% of your staff is available in that office party, the intent here is if it's an office party, if you're doing it for everybody and your meal is not 50% anymore, it's a small percentage of the total expense. Or if you have a lot of potential clients being invited to your location, or you are sponsoring something, then it's still 100%.
Okay, so a company with 100 employees decides to buy lunch for all the employees every Friday of the week throughout the year. Is it deductible 100%?
It's 100% deductible, because now even if the owner, the shareholder is eating the food, it's just 1% of the total expense. It's not 50%.
Correct.
So allowing 50% wouldn't be fair. I know I would have eaten it anyway, but my portion is not 50%. My portion is not $500 in our example.
Okay.
In that case, the meal expense every Friday, lunch for the whole office staff is still 100% deductible.
All right, so IRS is playing very, straightforward, that they're giving the owners of the companies a benefit, and as well as for the restaurant, they say, listen, 50% is good enough. 100% was actually too much, I guess.
Well, that was done temporarily, so people are spending more money going out, and they are seeing some tax benefit. And it was to revive the restaurant industry.
Okay.
Nobody was going out at that
So
time.
now this category, very famous category for all the business owners, it's called meals and entertainment.
Right.
We talked about meals. What exactly, how you define entertainment and what's deductible?
Absolutely. So let's talk about it. If you are going to a golf outing or a musical event, and now you are paying for yourself and you're paying for the client, you're paying for client's entertainment, how much is it deductible? Is it still 50% or is it still 100%? In that case, the entertainment portion is not deductible anymore. Now, again, if you go to a golf outing, you'll have to see out of the total receipt, how much is the golf outing and how much is the meal? Because a lot of these entertainment events will have the meals included in there. So the rule is the meal portion has to be separately listed out on the receipt. You can't just say, oh, I paid $100 for the golf event. Me and my friend went there, and golf is only $10. The meal was $90. So I'm deducting $90. That's not how it's going to work. The meal has to be listed separately on the receipt. If you say meals and entertainment expense, and it's a single receipt from the golf outing, from a movie show, the meal portion has to be listed separately out in order for it to be deductible.
Okay, interesting. So that's what the entertainment is. Even if you take somebody out for a movie or something, it's still the same thing.
Entertainment portion is not going to be deductible.
It's not going
And this is for 2023. So when you are filing your taxes for the last year, for 2023, you may want to separate out, if you have a small business, as what expenses are deductible at 50%, what expenses are not deductible, and what expenses are deductible at 100%. A lot of people got used to of lumping everything together. A lot of people
That's why it's called meals and entertainment.
A lot of people were just putting everything together because 100% deduction. Now you have to divide it into multiple portions. That this the meal that I took out one person. And how do you decide it? At the end of the year, you don't even know which one is one person meal, which one is two people meal. The way the IRS looks at it, if the bill amount is small enough, let's say if you are spending $20, more than likely either you ate it or you ate it with one person. So the max you are allowed is 50%. If you ate it alone, it's not allowed. If you are eating at the business card, it's 0% deduction.
Okay.
If you are going out with a client with one person, 50% deduction. If there are a lot of people that you are paying for through a business card, business account, it's 100% deduction. Entertainment is not deductible.
Okay. Now, as a CPA, the question comes to me is that as a CPA, what do you think? How is this going to gel with the from small to mid-size business owners?
Well, depending on the type of business you have, a lot of businesses will have not only the extra paperwork, extra scrutiny, will be losing some portion of the deduction that they were used to getting. The good thing is IRS made it clear again and again over last 3 years that those rules or the extra deduction that the IRS was giving was temporary to begin with. But a lot of people assumed that like everything else, IRS will extend this deduction just because the economy is still struggling. The rates are very high and a lot of people are still having problems with their finances. So a lot of people expected the IRS to sort of extend that rule. Unfortunately, they did not. Now the meals for 2023, the year that you're filing now, is going to be deductible at 50% unless it's an office party or a lot of people are eating together.
I see. Okay, very interesting information. Viewers, we wanted to start with this very important category called meals and entertainment because for small to mid-size owners, this is one of the most popular categories. And Ajay wanted to have a real clarification on that, what's deductible, what's not deductible. With that note, we're going to take a short break. And when we come back, second part of the tax talk with Did You Know segment coming your way right after this messages. Please don't go anywhere.
Welcome back. This is again Ajay Kumar, CPA from SAI CPA Services. Did you know in 2022, IRS collected $53.5 billion in civil penalties, almost $54 billion in civil penalties. And I remind you, civil penalties not income tax. Civil penalties are the penalties for non-filing or late filing or non-payment or late payment. Penalties other than the income tax, $53.5 billion.
All right, that's interesting to know. Once again, viewers, welcome back to the Tax Talk right here on ITV Season 3. In case if you have just joined us, this is the first episode and you just heard a new segment which we're rolling into this season. It's called Did You Know? Now the civil penalties. Government got $55 billion in civil penalties from the people, from the taxpayer. Either they did not pay tax or they paid late or they paid less and whatever it is.
Either you did not file or filed late, those type of penalties, or you did not pay on time or paid less than what you were supposed to pay, those type of penalties are typically referred as civil penalties. There are some 1099, some business-related penalties as well, but at a high level, for non-filing or non-payment, $53.5 billion.
So you think a government would be using that money to pay off the debt to the Treasury Department, national debt?
I'm not sure how
Listen,
they use it.
because this is the extra money, right? This is something that they didn't expect.
I think over the years, it all gets factored in. Now we are at a point when they are collecting similar amount of money every year. So it's already part of the budget.
I know that, but this is extra money. They should just use that money to pay off the,
I'm sure it's a lot of money and they can do a lot of good things with it.
First pay off the debt. So at least, we can have our debt reduced anyway. Let's continue with the show. Now we're going to bring you information on residential energy. Now, again, pay attention to it. It's residential energy. What falls under residential energy and how does it work for the 2023 taxes? Ajay is going to give us insight on that.
Absolutely, Sanjeevji. Thank you. So residential means you have to be residing in the house. It cannot be an investment property. When you're living in, the person who's living in has the right to claim this credit. And what's included here is anything that helps you improve the energy efficiency of the home. If you remember, up until last year, and when I say last year, up until 2022 taxes, The residential energy credit was allowed up to $500 for the lifetime credit, Sanjeev ji. Now they have changed the rule in 2023 while you're filing the taxes for 2023. If you had any energy efficiency installment, it could be water heater, HVAC system, insulation, new roof, solar system, anything that you installed can help you qualify for this new, comparatively speaking, newer credit. We call it residential energy credit. Now you can get $1,200 per person, $2,400 married filing joint. The best part, there is no lifetime limit to it. If you remember earlier, the credit that we had, it had a $500 lifetime credit. The credit works in the similar way. Even now, you can claim up to 20% of the installed value or the maximum limit allowed, whichever is lower. Say, for example, if you are installing a water heater and you spent $5,000, Sanjeev ji. So the 20% of 5,000 would be 1,000. So you can claim up to 1,000. If you had spent 10,000 and 20% is 2,000, then you claim up to $1,200. So the calculation, the computation is still done the same way, except now they have higher limits of what you can claim, and there is no lifetime limit. You can claim this credit every year.
So 20% of the total cost,
or the maximum limit,
or the maximum, whichever is the lower one.
Whichever is the
okay.
lower.
All right. Now you mentioned water heater. All right. With that note, does washer and dryer also fall in that category?
Absolutely. So you have to have energy efficient water heater, energy efficient. You have to have the rating for these dishwasher, washer, dryer. These appliances comes with green rating, they call it. If you have those qualifying appliances, and you will see a lot of people talking about it. People knew the rule, but it wasn't really published or it wasn't really given out in public. But when people starts claiming it, you will see a lot of vendors promoting it as well.
Okay.
Everybody will be talking about it. Earlier, the problem was, so you install the water heater once, but now tomorrow you need to install HVAC. Next year you need the insulation. The year after you need the washer dryer. But you are done with the credit. You can only claim it once in the lifetime, $500 and done. But now they have fixed this situation. Now they know 1 year you need the water heater, next year you probably need the windows, and the third year you need the HVAC system. Now they allow you to claim certain amount, not an unlimited amount, but a certain amount, which is much higher than what we used to have every year.
Okay, interesting. Now this energy credit, how different this energy credit is than electric vehicle?
So electric vehicle credit is a new credit, and a lot of things change with the electric vehicle credit. We did not want our viewers to confuse with electric vehicle credit as how do you claim $7,500, what should be the car value, what should be the income limit for the electric vehicle credit. So we'll cover our electric vehicle credit completely in our next segment next week, same time. This week we wanted to focus on residential energy credit and wanted to leave and did not mix up electric vehicle credit, which is separate, which is not this thing. Electric vehicle credit is $7,500, which will give you the details, the income limit, as well as the value of the car, what it should be for the electric vehicle purchase.
Okay. Now, you think this residential energy credit and changes in this category allowing taxpayer or the homeowners to take deduction every year, which is going to be good because homeowner will decide to have maybe solar 1 year, water heater next year, and windows next year, all this energy saving thing, right?
Absolutely. Now you can
so
plan
that way
it.
they can continue to get credit and save some money.
Absolutely. Now you can plan it, budget it accordingly. This year I'm installing this equipment.
Yes.
Next year I can plan to change something else, and the year after I can plan to change something different. So I can expect a credit. I do want to remind our viewers that this is a non-refundable credit. You must have a tax liability. You must have a taxable income. Not that you have to owe taxes. Please understand, a lot of people on W-2s, they pay their taxes when they get the pay stub. At the end of the year, they get a refund. They can still get this credit. It's not that you have to owe taxes at the end of the year. Non-refundable does not mean that you have to owe taxes. Non-refundable means that you have to have taxable income. You have to have tax liability. You may have paid the taxes earlier, but you had the taxable income, you had the tax liability. In order for you to qualify and get this money back, you must have the taxable income. If you have a business where you don't have any money, or if you are not making uh, any liability, your taxable income is lower than the threshold, in that case, you wouldn't get this credit.
Okay, very interesting. Good one to know. Viewers, make a note of this residential energy credit segment and see if you can use it and save some money. All right, we continue to move. Anything else you'd like to add?
Absolutely. I'm glad you reminded me, Sanjeevji. Thank you. So the year has just started.
Right.
There will be a lot of deadlines, lot of timelines. So you have to be, especially if you have a business, you have to be in the know. Please remember 15th January or 16th January, 15th January being the holiday, is the estimated tax payment date for the fourth quarter. If you have a business, if you have income, if you expect to owe more than $1,000 in taxes, you need to make the estimated tax payment for the fourth quarter of 2023, and the deadline for that is January 15th, 16th this time. If you have a small business and if you need to issue the 1099s, any payment that you made to any attorney or to an LLC or to an individual, if you paid more than $600 throughout the year, you need to issue a 1099 to them. That deadline is January 31st. The business tax deadline for the S corporation or multi-member LLC is going to be March 15th, and the personal tax deadline is April 15th. So make sure you take enough time. This is important. This can save you a lot of money and save you a lot of hassle. It's not just the money. If you do it right, or if you just don't take it seriously, it can create a lot of nuisance.
When you say estimated tax, right, for the quarter 2023, for the fourth quarter
Right.
2023, how do you estimate? You basically look at your sales and then say, okay, this was my sales, or maybe let's say some of the sales may not have realized here, something like that. Then you just come up with one lump sum payment to make it.
Absolutely. So that's why the name estimated. You are supposed to estimate it as best as you can, and in theory, you want to make sure that you are paying 1 quarter extra. And the theory is, by the time you file your taxes, the first quarter payment for 2024 is due anyway, meaning first quarter 2024 estimated tax payment is due by April 15th. All these taxes needs to be filed by April 15th. So you want to make enough payment to cover the first quarter. So you're not against the
Okay. All right. So a lot of basic information, viewers, for you in this first episode of the Tax Talk Season 3 right here on ITV Gold. As we mentioned earlier, that we are starting, in very interesting segments. One is called Did You Know? That's very informative segment for you to know that, what's happening in the world of taxes and the US government. And the other one is a financial code. So it's now time for the financial code from Ajay Kumar.
Absolutely. Thank you, Sanjeevji. Today's quote, our viewers, is a small leak can sink a great ship. A small leak can sink a great ship. Please, so be careful about the small expenses that you have. A lot of people have Netflix, Apple TV, Amazon TV, and people don't realize how many subscriptions they have. And they're paying hundreds of dollars every month. A lot of people carry balances on the credit card. They don't realize the credit card companies are charging interest, penalties, late fees. So just be careful about the small expenses. When you add up all these small expenses, it makes a large difference.
Yep, absolutely. So that is that, they say that one little hole can make a difference. And
Absolutely.
That's a great quote, because before you realize it, that's your unnecessary money going out of it. Anyway, with that note, we come to an end of this show, the first episode of Season 3, the Tax Talk, right here on ITV Gold. Once again, the show is brought to you by SAI CPA Services for all your personal tax or accounting matters, or even the business matters, taxes and payroll services, bookkeeping services, virtual CEO, virtual CFO, any kind of services can be assisted by SAI CPA Services. They are very professional. They're on-hand, knowledgeable and trained CPAs will guide you in the right direction. Remember, SAI CPA always says that it's not about refund, who's getting more refund, who's getting less refund. It's all about doing your taxes right, so that way you have your right taxes filed and you don't have to worry about IRS letter or anything like that. So do contact SAI CPA Services 908-380-6876 or visit saicpaservices.com. calm. With that note, I'd like to thank Mr. Ajay Kumar for your time, sir.
you.
Thank you so very much.
Absolutely.
I am
My
Sanjeev
pleasure.
Pandya, wishing you all happy and tax-free days ahead until we meet again. So long.
Thank you.